Zach, how are you?
Good. How are you,
Great,
Dale?
good. Great to have you back on Face. I was hoping I could start with this. We had this 10% correction, and the melt-up people are coming back on board. And I think that one of these years, buying the dip won't work. Where's your head at and wave structure in any of the stock indices,
So
S&P?
I think this is only the first half of at least a good bounce. Here, let me
Okay.
put some charts up.
All right.
Um, I think this is just the start of a bigger bounce, and there's a lot of good potential for a more significant top to have been struck, but we're not there yet in terms of confirming it. I think Nasdaq probably argues the
They were
best.
th- they were the weakest,
Right.
14%. Okay.
Right, but also like more easily counts complete as a larger structure off of a fifth wave off of 2022 lows.
Okay.
And even some things in the sectors here, it even failed to make a nominal higher high in February, which I have my alt little yellow wave five here is just a possibility that this was just a slight extension, but that truncated.
Okay, that's not the Nasdaq 100. That's the Nasdaq,
Yeah, this is just
right?
the Nasdaq futures,
Okay.
which counts a little bit differently than the S&P. It seems to count better as just a cycle wave three top. So, which gives us a little bit more clear degree parameters for where ultimate support may be. But in the near term, I think this is only just the start of a bigger bounce. I want to see a correction hold a higher low. I think we're pretty much getting to the end of this move off of last week's consolidation. We're right at a 100% this morning. Could get
Yeah.
some more extension. There's not a very clear 1-2 in here inside this three, so this could get another 4-5 on up towards the 20,600s. But most of this measured move is done, and so, but looking for the correction from that to be, it could be deep. It doesn't have to be, but at least to hold a higher low and set up for another swing move into probably through most of April and maybe even into the beginning of May. And that's going to
Interesting.
get all the people who are bared up over, this correction, bulled up again just in time for us to possibly start a move down from that resistance region. Now, if it does what it did, the last several times we had a nice move off of a potential significant top, and then it filled out a corrective bounce and then got to that decision point and then just consolidated a little bit and then kept going, then we might be back in extension mode. And certainly the ES allows more for potential extension higher. Mentioned with the Nasdaq, that move off of 2022 that counts more easily complete on the Nasdaq. In on the ES, it's much easier to count this as just a larger wave one and wave two off of that 2022 low, and then this was just the top of wave three. That really should, similar to the NASDAQ, get another leg down after this, even if that's not the more significant top, which I would prefer. And then from there, we can get another extension and melt up and bigger blow off top. It's interesting. Garrett and I look at a lot of the individual sectors in our Thursday webinars. So usually we're going to pick one of those particular sectors, delve into it, look at the key components in that sector, and look where they agree with what the ETF looks like and where they differ and which ones are providing strength, but also doing that comparison between the different sectors to see that rotation potential.
Okay,
Um,
so would you say your preferred short would be the Mag 7 since they had the deepest correction? I mean, let's go with something like Apple.
so I mean, if you just look at tech in general, the
Okay.
like XLK similar to the Nasdaq, I think semiconductors actually do have the biggest potential for a more significant top. So when you compare, this can count the same way as that high for the cycle wave five of the Nasdaq in February, looking for more of a bounce with this possibly just being a larger A wave, and so that would push this up, I think, yeah, we can give that the benefit of the doubt that it's going to
So
be
you're looking for the market to correct its, we were in extreme fear mode. Now we're in just fear mode. About a month to rinse that bearishness out of the market and have people be vulnerable. They'll think they were geniuses buying the 10% pullback, and
exact.
we're going straight to new highs. But it's a failing rally. Use your fibs, right?
I think that that makes the most sense, but again, I'm not gonna
All right.
fight it if it decides that it doesn't want to turn
And
down.
what would tell you that back over 6,100? Because I'm looking for 5920 as a possibility for a sale in SPX.
On
61,
SPX.
61.8 back.
Yeah, if it gets over 6,000, then it starts to, it really depends on the structure for the S&P getting there,
Yeah.
for it to really, be something more than that.
Mhm.
Um, so in terms of things that look more like there's a potential top in place, one of those things is like transports, IYT, but even those things, they're
Retail.
so far filling out corrective structure off of that high. So even
Okay.
if this is the start of a bigger bearish move, and this is just a fourth wave and it gets another drop to lower lows, which would concern some people, it would still be due Elliott wave wise, look like it needs at least another bounce back up here to the low to mid 70s. Even if this is an ABC for wave one of something even more bearish, or just an A wave and it needs a B wave. So, I think the topping process is a process. And, we had a couple of opportunities at lower highs in the past to get some stronger moves to the downside. And then we just consolidated at those levels and didn't really turn down.
Okay.
So,
That
we gotta restart that whole thing. So here's like the equal weight version, which you mentioned, like the Magnificent Seven. And I do think that those are going to play a role, although I'm very, very bullish Tesla. I think that might be something that runs very counter to what the rest of the market is doing. And I don't exactly know why from a fundamental standpoint. I know why based on sentiment. But its chart looks very, very different. I think the pullback was a significant low for that. But the equal weight, I think we're bouncing in a similar B wave. This can be a larger version of just this A wave. We're still only between the 382 and the 50%.
I really don't even know what this is.
The
QQE.
QQEW is an equal weight NASDAQ.
Oh, okay. All right.
So it kind of smooths out the distortion that we get from those Magnificent Seven.
Mm-hmm.
But this same A, B, and a C wave down, while it could be the start of something bigger, it's going to be due for a bounce at least. And there is that potential that this is just a larger 3-4 and we get another extension. And we look for what are those things that if we are going to get more extension, what are those things that are going to fuel it? And so, if we're going to get a more crazy blow off top, while MicroStrategy might have put in a more significant top back here in November, the initial move off of that is only 3 waves down. So this
Yeah.
can be a corrective bounce. And if it doesn't get 5 waves up as the start of a 5th wave, then there's a possibility that if this low support breaks, then it's going way, way down. But this has some nice potential for a blow off top that can take it
Yeah,
into.
with Bitcoin.
And we're also looking for those opportunities that can set up as short stuff. We're looking a lot at some of the retail names. A lot of those held lower highs that look like B waves back
Mm-hmm.
earlier last year, and are getting some good price action off of those highs and the possible start of a bigger C wave down. But a lot of them rely on corrective structure, so it's not an immediate clear impulsive start to any downside. So it's going to be a slog that allows for lots of corrective bounces, and if those bounces get over resistance, then that can easily derail the downside potential. But we are looking for the things on both sides of the equation. If we're going to head higher and get past the resistance that we're looking for on the bounce, And also what's fueling that bounce. Right now there's a lot of good, the Tesla was great yesterday. There's a lot of good small caps
So
and
why are you bullish Tesla?
I mean Elliott
I
wave.
mean, it's all the first thing I heard you say all day that you have conviction about. Most of the other stuff is on one hand, if it could do this, on the other hand.
Right,
So
okay.
let's go to what you have conviction about, Zach, instead of,
Um
yes, we know
we have a
markets can go up and down.
so I'm counting Tesla as being in a larger cycle degree wave three. Its primary three of
All
that
right.
cycle wave three hit just shy of a 1,236 fib extension back in 2022,
All right.
at a slightly truncated high. Held a fourth wave. It's filling out as a diagonal, so we only have three
All
waves
right.
up to start that move. But while this could have been all of the wave three and this is the wave four, I really think this counts better as an A and a B inside a much bigger third, because Avi's Fibonacci pinball suggests that when the three of your larger three hits that 1,236, the five of three is going to try for that 1,618, which on Tesla is all the way up at 1434.
So you buy it and your risk management is under this recent low that we had last week.
Yep, we're following really closely the structure here off the low for this to either get five waves up as a bigger wave one or an A wave of this wave one, or
Yeah.
maybe fill out a leading diagonal for this wave one of C. But
Okay.
it's looking great off the low so far, but
Yeah. Yesterday.
allows for some consolidation now.
Yeah. Okay. That's a big call, and that's a big contrarian call too. Thank you for that. Uh,
My pleasure.
I thought it was probably um, toast because it was kind of the weakness all the way on this decline. What
Right.
did we lose? A 50% decline,
Yeah.
right?
But it still is outperforming some of the other Magnificent Sevens over the last 12 months or so, despite
What's been weaker? Apple,
let's
Nvidia has it's at 120, 120, so it's down 20%. But I don't know anything
Apple
that was
isn't
done.
Apple isn't down nearly as much, but it definitely has more potential to count as an even more significant top. But again, so
Yeah.
far off the high, things we're starting as baby steps with corrective moves. So can get another low on Apple in the very, very short term, maybe when everything else is pulling back in that B wave of the higher bounce for a B. And then Apple's going to lag and it can just be starting its B wave bounce after from that possible one more low.
Okay. Longer term,
Longer
the
term.
top. Yeah, I think I saw someone say this was 5 of 5. That was it, 5 of 5. But
So
you're
I'm
showing,
I'm not quite as I mean a super cycle degree wave four that takes it back well under 100, is
yeah, that's pretty big.
pretty bearish, but I do think that it's going to have another run up after that. I think this is a super cycle wave four for Apple, while the same consolidation would be a cycle degree wave four for the Nasdaq itself. But
Okay,
this really counts like an ending diagonal. One of the things
right.
we know in Elliott wave, after an ending diagonal, usually the correction is pretty fierce and quick, at least to start off, and ultimately it's going to try and head back to either the prior degree wave four, or the originating region of that diagonal, which for Apple that can easily take it down closer towards the 30 region.
That's my favorite. That's my preferred short on further strength in the market.
Okay.
I see. I'm thinking that maybe we could get back to 230, um, and wrong over 250
I mean, I would even dabble in a short possible
right
if we
here.
if we I mean, I think
Stall
it's
here.
pop up to 224 region possibly in the next
That's 38%. Yeah,
right, and then drop down towards 201.
yeah.
Might not be a bad play as long as you look for that to possibly end more abruptly if the rest of the market catches support in this region and then
Can I ask you if this is an alternate Elliott count that we get this had the first break and now we're going to have some type and you're looking for a correction, some type of ABC that we're ready for three. That's two. This correction we're getting is two. That would be the most bearish count you could come up with.
Yeah,
If
I
the
mean
whole
the
break,
problem. So the,
go
I
ahead.
mean, it's certainly a valid. We use the Fibonacci ratios a lot, to give us some additional clues at the smaller degree. So
Yeah.
one, you only have three waves down here, but it is to a 100% measured move of this move off the high. So if anything, this counts better as a fourth wave, allowing for one more low that's going to get to the 1, 2, 3, 6. Usually your wave one of
The
something.
S&Ps is what I was talking about.
Oh, I mean the S&P is also still three waves down off of, a potentially very significant high.
Okay, well then so is Dow, so is the Dow.
Right.
They
Um,
all are. So they're all just three waves.
I mean, you could force it as something other than three. I mean, I'm fine with looking for confirmation of this being a more significant top rather than it end up holding another fourth wave and getting another extension. But in this bounce, I think this is probably just the A wave. So
Right.
I would first be looking for a corrective move to hold in the 5500s and then get another move up towards that resistance that we talked about before, as opposed to slicing through that like an impulsive start. Now, if this is, it should
What
not.
if we don't have a pullback here and we just go straight up towards fib levels? If we don't have
um,
a pullback here,
there are
they
few
just keep
indexes.
squeezing.
Right. There are few of the sector ETFs where this looks like an A and a B, the same as this, but instead of it being A and B of an A wave, it looks like the parentheses A and B, and then this move looks like maybe just wave one of a C wave that will get a little bit less of a consolidation and then just extend more directly higher. I think
Right.
XBI is one of the ones that I think looks
Home
a little bit more like that, and
home
also.
builders.
No, XBI is a biotech,
Oh,
and then
biotech.
also the semiconductor index at the smaller degree looks like that as well. I think it's in a corrective bounce
Okay.
um, as a possible wave one start to a bigger C wave down, and this is working on the wave two. But here, instead of this being an A, B, C completing for all of a bigger A, it looks like this is a 1, 2 start to the C wave already. So it can consolidate a
Okay.
little bit more in this wave two, but is not going to get nearly as much of a retrace and might be racing the rest of the market to head up higher into the end of March and into April.
Okay. And the semis hadn't made a new high since last July.
Right.
So I mean, they kind of led the whole decline.
Exactly. And we were looking at a pretty big discrepancy between the actual semiconductor index and SOXX, which follows that, and the
Yeah.
SMH ETF, which allowed for an attempt at one more high. And this was much more heavily weighted to NVIDIA and AVGO and I think TSM. And those three were trying to hold some support here at the end of February to allow for another blow off top to one more high. But at the same time, we were short SOXX and short AMD and looking for those to be the leaders on the break to the downside. So now these are more aligned that it broke that support.
Okay. Nvidia being the really I guess they call it best of breed, right?
I mean, at least it was for a while. I think it also might have put in a much more significant top at this truncated top in January. Actually, it's not truncated. It made a nominal higher high
Yeah.
over the November high to count as all of that fifth wave, and now we're just working on the same kind of corrective bounce.
Right.
It's interesting. It hung back a lot compared to the Nasdaq in the past several trading sessions,
Yeah.
where the Nasdaq filled out more of a larger version of this A wave, the A, B, and a C wave of an A wave. This
Yeah.
looks more like it held as just a B wave and a wider flat B, and then it's going to sync back up with the Nasdaq after it gets more of this consolidation here.
Okay. You want to wrap it with either gold or the miners?
Yeah, so
I
I mean the gold we are still bullish on and think we're heading up to further all-time highs, but off of the 2024 consolidation that we're counting as the B wave inside wave three, it really looks like we're pretty close to a top to that intermediate degree wave three. So we're seeing that is a lot of good potential for rotation in the mining sector and for silver to outperform.
okay, okay.
So looking
So
for
you think that even on this gold on this pullback, that the shares, unlike what they've done for years, will hold up better than the metal.
I think that the miners are still going to, the miners are very, very profitable right now with gold as high
Yeah,
as it is, and it can peel back and their margins are not going to be hurt too much for a consolidation, even the size of that intermediate degree wave four, which could, I'm showing like the more normal consolidation region because I think that's important when you're dealing with risk management to look
yeah,
for what would be most normal and not rely on it to be a more mild consolidation. But also, there's a lot of them that have a lot of silver exposure and have a lot of copper. I know you guys were talking about being bullish on copper. Platinum and palladium also look pretty bullish here.
yeah,
And so this is the gold to silver ratio chart that we've looked at a lot together. It
yeah.
has a lot of potential for this extreme region to hold as resistance and
Right.
for silver to get some time to shine.
Okay. I have the high doing silver around the, I don't know, 36 level. Take out the prior high, prior weekly high.
I would love.
There.
Yeah, yeah. So
Okay.
I'm look the same move that gold looks like it completed off of June. Silver got a deeper retrace and made a lower low for its B wave, and then did not advance and fill out the same C of three. So in the same overall larger structure for Elliott wave, silver has hung back a lot, but allows for it to be much more bullish. And I think this fits nicely with that ratio chart where we can get one more high in this A wave and then consolidate in the B. But there is a potential for this to have been, I switched over to this cleaner version of the tab because the other one's cluttered with a lot of the microstructure. It is possible that this is a one and a wave two start to an ending diagonal for the C wave already. My preference, though, because Fibonacci Pinball says if we can get this A wave to the 764 with one more little micro high and then hold a B wave consolidation, maybe as that larger fourth starts in gold, then on a bounce in gold, silver can outperform and run all the way to 40 for just this
Wow.
third, then hold a fourth wave and then get a fifth wave up towards the 43 to 44 region for a more significant top. And then it gets that same parentheses wave four to catch up to gold on the consolidation.
Okay. Yeah, the miners, silver miners look great.
Yeah, that probably is far more bullish than GDX and GDXJ, especially the SILJ.
Yeah.
With this, I think this, despite this being such a deep fourth wave here in a leading diagonal for this wave one, this fits better with the counts for GDX and GDXJ along with other things. So allowing for more of this wave two makes sense. Also, it's very hard to get five waves up in this move as a green wave one. So I would like to see a little bit more consolidation in the near term, but using the leveraged inverse ETFs as temporary hedging on scalps during the day, but keeping most of my long-term miners positions very much intact because
All right. And
similar to
this
like
was all right, so this was just wave one. Then we're correcting to, sometime in April for a two, and then the money wave must be setting up after that.
yep,
Okay.
that would be the third of a third.
All right. Well, you know what? I'm glad I asked you to talk with conviction today because I know, But your stuff is good when your heart and your head is into it. And we got some great stuff from you today. I
Um,
you know
we also
really
do like
appreciate. Go ahead.
uranium a lot down.
Oh, uranium. Okay.
Um, I've been when we had the potential for UEC and CCJ to be holding a 1-2
Yeah.
structure off of the end of last year in a 1-2 start to an even larger primary degree.
Yeah.
But URA and a lot of the smaller names were flashing a warning of that this was, instead of being wave one and the start of the primary wave three, that this was a larger fifth for an even bigger primary wave one, which ultimately is more bullish, much, much longer term, but does allow for this to be a fourth wave that we're working on more of a bounce in the short term, and then allowing for an attempt at one more low
To
before
complete.
that
Yeah.
reverses in the bigger move. And that seems to be what more of the smaller names are following. But UEC and CCJ did hold on to this
Yeah.
1-2 potential off of the September lows. So as long as that 460 low holds for UEC and the comparable low on CCJ, those could force URC to get more than this wave four and fill out more of the start to that 3 of 3.
Wow. Okay. Well, that's going to be great to determine. Uh, WTI quickly. Is it like uranium? Similar
Um,
chart pattern or
so I
weaker?
I'm more enthralled with the actual energy
Yeah.
stocks as
They're
opposed
so
to
much stronger than crude.
right, as opposed to oil itself. I think
Okay.
oil can still try for one more consolidation low and then turn up, and that might make this whole structure count better as a triangle for this B wave off of here. So A, B, C, D, E, F, and maybe a G wave of a triangle.
Yeah.
But giving us the benefit of the doubt that it's starting the third of a diagonal. So also allows for some small degree consolidation in the very, very short term into just the 90 to 87 region would be the ideal support for XLE. And then we can start the rest of that third wave up that can take us well into the hundreds.
Well, I mean, Buffett has liquidated a lot of things, stocks, real estate, but bought Oxy.
Right. Oxy doesn't quite have the same structure. It made
Didn't
a
look as
lower
good to
low
me.
for its wave
Yeah.
four, but and there's other things like Devon Energy also made a lower low
Yeah.
for this wave four back here.
Yeah.
But a lot of them held, and something there's a few like COP that can count as that same wider flat wave four. So instead of holding lows that XLE and a lot of other things held from back here in 2023 or
Yeah.
at least mid 2024, drop to that lower low, which is actually technically still a higher low of a running flat, but
Yeah.
does potentially count as an even larger primary degree wave one and wave two. I mean
Okay.
that could still need one more low where this is just a fourth wave bounce, but micro support on something like COP is in the 93 region, and it's looking strong off of that recent low. So a lot of bullish stocks in the energy sector, not
Great,
just medium side.
great look, Zach. So if someone wants to learn your style of Elliott, what would be their best way to go about it?
Jump onto ElliottWaveTrader.net. We have a lot of free education resources. There's a lot of good webinars and some PowerPoint presentations that you can click through that give you a rundown of some basic stuff to Elliott Wave, all going on up to more advanced stuff with Fibonacci Pinball. And we offer 15-day free trials. I
Oh,
chime
cool.
in the markets room and other services on the site, but primarily spend my time in stock waves and the metals mining and agriculture service.
All right, my trading warrior brother, Zach Manis, who put up with a crabby old man interviewing him today.
Never.
Uh,
Always a
all
pleasure.
right, all right, brother. Well, I hope you have a great quarter coming up here, Zach, and
Thank
that
you.
and that
Thank you.
pips just overtake you like a flood. How
Amen.
about that? How about that?
Amen.
And all right, so check Zach out. You know, he has every elitician has their own twist to things. What I like about Zach is he doesn't show extreme targets and counts. He keeps things pretty conservative, so that keeps a trader's uh, objectives
I do try and
realistic.
make sure people maintain a good awareness of how that translates into risk reward, and also an awareness of risk skew, in saying, look,
Yeah,
we can have a larger degree target here, but let's focus on the immediate move in front of us. And if the risk
yeah,
reward works for what's right in front of us, then for the larger part of it, that's going to be even better.
yeah. Take what the market's giving you
Right.
instead of what you want from it.
And I try and be, I use some color coding and some different colors for subwaves to draw attention to things, but I really try to avoid alternate counts that point in entirely different directions as well. And
Yeah.
if there is something that's nuanced difference, I'm going to discuss that in more detail in the room, and also show where the overlap is, and at what point those two paths diverge, and how we should be able to tell the difference of which way to lean at the smaller degrees.
Sounds like you could learn a ton there, guys. So thank you, Zach. I'll be talking to you in June this summer.
All right,
Ha-
sounds good
ha-
then.
have a great spring, all right, buddy?
You too. Take care.
All right, so that's a wrap, everyone. We went a little over to join the team in 12 minutes on the morning edge. Don't just count your waves, count your blessings. And good turnaround Tuesday to you. See everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.